Welcome back to the Crypto Intellect, your trusted source for the latest crypto news, XRP updates, and global financial developments. Today we have a major story that every XRP holder needs to understand because the Clarity Act has entered what many believe is its final and most important stage, while at the same time the International Monetary Fund continues watching XRP alongside some of the world's biggest digital assets. There are also new developments surrounding Ripple's regulatory strategy that could completely change how investors view the long-term picture. Before we jump in, let me know in the comments if you already knew Ripple had formally discussed the idea of a federally chartered digital asset bank in its communications with US regulators. Just answer yes or no. Also remember, this video is for educational and informational purposes only and should never be considered financial advice. Always do your own research before making investment decisions. If you enjoy in-depth global crypto coverage like this, make sure you like this video and subscribe because we cover the stories that many people completely overlook. Right now, XRP is trading around levels that many investors have not seen for nearly 20 months, and naturally that has created fear across the market. But something interesting is happening beneath the surface. While price action has disappointed many retail investors, the regulatory conversation has become more important than ever. At the center of everything is the Clarity Act, a proposed piece of legislation that could permanently define how digital assets are treated under United States law. This is not simply another crypto bill. It has the potential to establish which digital assets qualify as securities and which qualify as commodities. That distinction affects everything from trading rules to institutional adoption and long-term regulatory certainty. When investors talk about clarity, this is exactly what they mean. Without legal clarity, major financial institutions often hesitate to fully participate because they need predictable rules before committing billions of dollars into an emerging asset class. The latest developments surrounding the Clarity Act have created mixed emotions across the crypto industry. Earlier expectations suggested there was a stronger chance that lawmakers could move quickly, but recent estimates have become more cautious. Several analysts who closely follow digital asset legislation have reduced the probability that the bill becomes law this year. The biggest reason is not necessarily opposition to the legislation itself. Instead, it comes down to timing. Congress has an increasingly crowded legislative calendar, and several major bills are competing for limited floor time. That means every week matters. Supporters continue to argue that there is still a realistic path forward, but everyone involved understands that delays could significantly reduce the chances of success. This is exactly why many observers are calling July the make-or-break month for crypto regulation in the United States. Understanding why this legislation matters requires looking beyond short-term price charts. If XRP ultimately receives clear legal treatment as a commodity rather than a security, the entire regulatory framework changes. Securities generally fall under stricter registration requirements and ongoing reporting obligations with the Securities and Exchange Commission. Commodities follow a different regulatory structure with different oversight. That distinction impacts exchanges, institutional investors, custody providers, financial products, and even how companies build services around digital assets. For years, uncertainty has slowed adoption because businesses have been forced to operate inside an unclear legal environment. The Clarity Act aims to remove much of that uncertainty. If successful, it could establish a foundation that allows innovation while also providing the legal certainty that traditional financial institutions have been requesting for years. Several lawmakers involved in these negotiations continue expressing cautious optimism despite the shrinking timeline. Behind closed doors, discussions have reportedly continued for months as different stakeholders attempt to resolve remaining disagreements. Banking interests, stablecoin provisions, decentralized finance rules, and compliance standards have all required lengthy negotiations. None of these issues are simple because lawmakers are attempting to balance financial innovation with consumer protection and national security concerns. According to those following the legislative process closely, updated language has continued evolving as compromises are explored. While no outcome is guaranteed, supporters insist negotiations remain active rather than stalled. That distinction is important because active negotiations often indicate lawmakers still believe an agreement is possible before legislative priorities shift elsewhere. Now, this is where Ripple enters the picture in a way that many investors completely missed. Earlier this year, Ripple submitted regulatory communications that included language about federally chartered digital asset banking. One particular sentence attracted significant attention because it discussed client assets being held within a federally chartered digital asset bank under appropriate regulatory protections. That wording is far more significant than many people initially realized. Companies typically choose every word in official regulatory communications very carefully because these documents carry legal implications. Mentioning a federally chartered banking structure suggests Ripple is thinking far beyond simply winning legal battles. It indicates a vision centered on becoming an important part of future financial infrastructure rather than operating only as a blockchain technology company. Imagine what that could mean if legal clarity eventually arrives. A federally chartered institution operating under established regulations could potentially provide secure custody, institutional services, compliance frameworks, and large-scale financial infrastructure for digital assets. That possibility becomes much easier to understand when connected to the Clarity Act. Regulatory clarity provides the legal foundation, while institutional infrastructure provides the operational framework. Those two developments complement each other rather than competing with one another. Many analysts believe the biggest barrier preventing broader institutional participation has never been blockchain technology itself. Instead, uncertainty surrounding regulation has consistently been the largest obstacle. Once that uncertainty begins disappearing, institutions gain greater confidence in building long-term strategies around digital assets like XRP. Another important development comes from the International Monetary Fund. The IMF regularly monitors global financial stability, monetary developments, and emerging economic trends. Recent monitoring documents have continued referencing several major digital assets, including XRP. That alone does not represent an endorsement or prediction about future prices. However, it does indicate that international financial organizations consider XRP significant enough to include within broader observations of global crypto markets. When organizations responsible for monitoring international monetary developments continue tracking an asset, investors naturally pay attention because it demonstrates that digital assets have become part of conversations extending well beyond traditional cryptocurrency communities. The global financial landscape is evolving, and digital assets are increasingly becoming part of those discussions. What makes the IMF observations especially interesting is the broader market context surrounding them. During periods when XRP experienced substantial price weakness, institutional activity appeared to tell a different story than retail sentiment. While many individual investors focused primarily on declining prices, larger financial participants continued evaluating longer-term opportunities. Markets often behave this way because institutions frequently analyze regulatory trends, infrastructure development, and future adoption, rather than reacting only to daily price fluctuations. That does not guarantee higher prices tomorrow or next month, but it demonstrates that sophisticated investors often examine different variables than short-term traders. Their investment horizon frequently extends years into the future instead of focusing exclusively on immediate volatility. Another topic attracting attention involves the growing interest surrounding XRP investment products. Exchange-traded products linked to digital assets have become increasingly important because they offer regulated investment vehicles for institutional and traditional investors. Reports showing continued inflows into XRP-related investment products during periods of weaker prices have sparked considerable discussion across financial markets. Institutional investors generally complete extensive research before allocating significant capital. Their decisions often involve detailed analysis of regulatory developments, risk management, liquidity considerations, and long-term market potential. Again, inflows alone never guarantee future returns, but they provide another data point suggesting some sophisticated investors continue monitoring XRP despite recent market weakness. That difference between institutional positioning and retail emotion remains one of the most discussed aspects of today's crypto market. Ripple CEO Brad Garlinghouse has consistently emphasized that XRP's primary utility centers on global payments rather than functioning solely as a speculative investment. During recent interviews, he highlighted Ripple's payment infrastructure and discussed the enormous transaction volumes already moving across its broader network. One of the biggest takeaways from those discussions was the observation that only a very small portion of existing payment activity currently utilizes digital assets. That suggests there remains substantial room for future integration if regulatory clarity and institutional adoption continue improving over time. Rather than presenting speculative forecasts, Ripple frequently focuses on existing payment infrastructure and the gap between today's adoption levels and future possibilities. Investors watching these developments often view that gap as one of the company's most compelling long-term opportunities. Garlinghouse has also explained the different roles that major cryptocurrencies may ultimately play within the global financial system. Bitcoin is often described as digital gold or a store of value, while XRP has consistently been positioned as a technology focused on efficient cross-border payments and institutional settlement. Whether investors agree with that perspective or not, it highlights an important reality. Different blockchain networks were designed with different purposes in mind. Comparing them exclusively on price performance sometimes overlooks the unique problems each network attempts to solve. Understanding those distinctions becomes increasingly important as governments, financial institutions, and regulators continue evaluating how blockchain technology fits into the future of international finance. Looking at the broader picture, several separate developments appear to be moving simultaneously. The Clarity Act continues progressing through a critical legislative window. Ripple continues expanding conversations around institutional infrastructure. International organizations continue monitoring digital assets as part of broader financial stability assessments. Institutional investors continue evaluating regulated XRP investment products. None of these developments individually guarantees a specific outcome. However, together they paint a picture of an industry gradually transitioning from speculative experimentation toward more mature financial integration. That transition may take years rather than months, but many analysts believe it is already underway. The current market environment reflects uncertainty, yet uncertainty often exists during periods of significant structural change. Of course, risks remain very real. The Clarity Act could face additional delays or ultimately fail to pass. Regulatory agencies may continue adjusting their approaches toward digital assets. Market volatility could remain elevated for an extended period. Global economic conditions may also influence cryptocurrency adoption in unexpected ways. Every investor should understand that none of these developments eliminate investment risk. Digital asset markets remain highly volatile, and prices can move dramatically in either direction within very short periods. Responsible investing always requires independent research, proper risk management, and realistic expectations. Exciting headlines should never replace careful analysis before making financial decisions. As we bring everything together, the biggest story is not simply XRP trading near multi-month lows. The larger story involves infrastructure, regulation, and institutional positioning. The Clarity Act represents one of the most important regulatory opportunities facing the crypto industry this year. Ripple's discussions surrounding federally chartered digital asset banking demonstrate a vision extending beyond current legal disputes. The IMF's continued monitoring shows that XRP remains relevant within broader international financial discussions. Institutional interest suggests some major market participants continue evaluating long-term opportunities despite short-term uncertainty. Whether these pieces eventually combine into a transformational moment remains unknown, but they are certainly developments worth watching very closely over the coming weeks and months. That brings us to today's big question for every member of the crypto intellect community. After hearing everything we covered today, what surprised you the most? Was it the final legislative push surrounding the Clarity Act, Ripple's federally chartered digital asset bank proposal, the IMF continuing to monitor XRP, or the ongoing institutional interest despite recent price weakness? Share your thoughts down in the comments because I read as many of them as possible. If you found this breakdown helpful, don't forget to like the video, subscribe to the Crypto Intellect, and turn on notifications so you never miss our next major XRP update. Thank you for watching, stay informed, stay prepared, and I'll see you in the next video.